Scene script. Have you ever wondered how to generate a $10,000 monthly income from real estate? Welcome to the dynamic, ever-evolving world of real estate, a sphere of opportunity where fortunes are made and dreams are realized. It's a world where the landscape changes with every sunrise, and no 2 days are ever the same. From the hustle and bustle of metropolitan high-rises to the tranquil serenity of suburban homes, real estate is as diverse as it is vast. But beneath this vast expanse lies an undercurrent of potential and profitability, a pulsating energy that drives the market forward. It's this potential that we're here to explore today, the potential to generate a monthly income of $10,000 from real estate. You might be thinking, that sounds like a tall order, and you're not wrong, but it's not an impossible one. With the right knowledge, strategies, and a bit of tenacity, you can tap into this potential, transforming the way you see and interact with the world of real estate. In this video, we're going to pull back the curtain on the real estate game. We're going to delve into the strategies that have proven successful time and again, strategies that have yielded returns in the form of a steady, substantial income. We'll explore the rental property market, take a peek into the world of real estate investment trusts, uncover the potential of fix and flip, and delve into the dynamic field of real estate crowdfunding. Each of these strategies has its own unique set of advantages and challenges, but they all lead to the same destination, a steady stream of income from real estate. So whether you're a seasoned real estate professional looking to up your game or a newcomer eager to make your mark, there's something in this video for you. If you're ready to learn the secrets of the real estate game, buckle up because we're about to dive in. To master any game, understanding the rules is the first step. So let's dive into the basics of real estate. When we talk about real estate, we're referring to property composed of land and the buildings on it, along with the natural resources such as crops, minerals, or water. It's a tangible asset that's been a cornerstone of wealth throughout history. Now, there are 4 main types of real estate: residential, commercial, industrial, and land. Residential real estate includes both new construction and resale homes, with the most common category being single-family homes. But there are others such as condominiums, co-ops, townhouses, duplexes, triple-deckers, quadplexes, and even high-value homes. Commercial real estate includes shopping centers, strip malls, medical buildings, educational buildings, hotels, and offices. Industrial real estate covers properties like warehouses and factories that can be used for production, storage, and distribution. And then, of course, we have land, which includes vacant land, working farms, and ranches. Why is real estate considered a good investment? Well, the value of real estate has a tendency to rise over time, making it a popular choice for long-term investment. It provides potential income through renting or leasing, and it's a great way to diversify your investment portfolio to mitigate risk. Moreover, owning property can also provide significant tax benefits. But it's not all sunshine and rainbows. Real estate investment requires capital, whether it's for the initial purchase or ongoing maintenance. There's also the risk of property values decreasing, and the potential difficulty of finding reliable tenants if you choose to rent out your property. Nevertheless, the potential advantages of real estate investment make it a game worth playing. It's about understanding the market, knowing your options, and making strategic decisions. And remember, every tycoon from Andrew Carnegie to Donald Bren started with the basics. With these basics under our belt, we're ready to tackle the strategies. One of the most common strategies in real estate is investing in rental properties. So what exactly are rental properties? Well, they are properties that you purchase with the intention of renting them out to tenants. These can range from single-family homes, multifamily homes, apartments, condominiums, to commercial properties. The goal here is to earn a steady stream of income from the rent paid by your tenants. Now, how does one make money from rental properties? Let's break it down. First, there's the rental income. This is the money you receive from your tenants each month. But remember, from this income, you'll need to deduct any expenses such as mortgage payments, property taxes, insurance, and maintenance costs. What's left after these deductions is your net rental income. Second, there's the potential for property appreciation. Over time, the value of your property may increase, meaning you could sell it for more than you initially paid. This is not a guarantee, though. The real estate market can be unpredictable, and property values can also decrease. So, what should you consider when investing in rental properties? Here are a few key points. Firstly, location is crucial. Properties in high-demand areas tend to attract more tenants and command higher rents. Secondly, consider the cost of the property and the potential rental income. Will the rent cover your expenses and still leave you with a profit? Lastly, consider your willingness to be a landlord. Dealing with tenants and property maintenance can be time-consuming and sometimes stressful. It's also worth noting that investing in rental properties requires a significant upfront investment. You'll need money for the down payment, closing costs, and any initial repairs or upgrades. So, it's important to have a clear financial plan. In conclusion, rental properties can be a great way to generate a steady income. They offer the potential for both rental income and property appreciation. However, they also come with their own set of challenges and require a substantial upfront investment. Rental properties can be a steady source of income, but let's explore more strategies. If hands-on management isn't your style, real estate investment trusts, or REITs, might be your ticket. REITs are companies that own, operate, or finance income-producing real estate. They work somewhat like mutual funds for property investments. Instead of buying properties directly, you buy shares of a REIT, which then uses your money along with other investors to buy and manage a portfolio of real estate. Imagine a basket filled with various types of properties: commercial buildings, shopping malls, apartments, or even timberland. That's essentially what a REIT is. It allows you to invest in a broad range of real estate assets without having to go out and buy each property individually. Now let's talk about the benefits. One of the biggest advantages of REITs is the potential for steady income. That's because REITs are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends. And these dividends can provide a steady income stream, much like rent from a rental property. But it's not all sunshine and roses. There are also some downsides to consider. For one, because REITs are traded on the stock market, they're subject to the same market risks and volatility as other publicly traded stocks. This can mean fluctuating share prices and potential losses. Additionally, while REITs do offer the potential for income, they may not offer the same level of capital appreciation as other real estate investments. And remember, just as with any investment, it's crucial to do your homework before diving in. Research different REITs, understand their strategy, the types of properties they invest in, their dividend yield, and their performance history. In conclusion, REITs can be a compelling option if you're attracted to the real estate market but prefer a more hands-off approach. They offer the potential for income and diversification without the need to directly own and manage properties. REITs can be a great way to invest in real estate without the need for direct property ownership. For those who enjoy a good transformation story, the fix and flip strategy might be your calling. Imagine walking into a rundown, dilapidated property, seeing past its current state, and visualizing the beautiful modern home it could become. That's the first step in the fix and flip strategy. This approach involves purchasing a property in less than perfect condition, investing time and resources to renovate it, and then selling it for a profit. Let's break it down further. The first step is finding a suitable property. You're looking for a diamond in the rough, a house that, with a bit of elbow grease and some smart design choices, can be transformed into someone's dream home. This requires a keen eye for potential and an understanding of what buyers in the market are looking for. Once you've acquired the property, the renovation phase begins. This can range from minor cosmetic updates like painting and landscaping to major overhauls like kitchen remodels or adding an extra bathroom. It's crucial to budget carefully and manage your time effectively during this phase. Overruns on either front could eat into your profits. Finally, once the property is renovated and looks like a page out of a home decor magazine, it's time to flip it. This means selling the property, hopefully, at a much higher price than what you originally paid plus the cost of renovations. However, it's important to note that the fix and flip strategy isn't all sunshine and rainbows. There are risks involved. You might uncover serious issues during the renovation process that could skyrocket your costs. The housing market could take a downturn, leaving you with a property you can't sell. Or you might simply overestimate the after-repair value of the property, resulting in lower profits than anticipated. Even with these potential pitfalls, the rewards can be substantial. There's the financial gain, of course, but there's also the satisfaction of taking something old and worn and breathing new life into it. Fix and flip can be a lucrative strategy if done right, but it requires more involvement. The payoff, however, can make the effort and risk well worth it. In the digital age, real estate crowdfunding has emerged as a popular strategy. As we venture further into this modern era, we see traditional norms evolving, and this holds true for real estate investments as well. So, what exactly is real estate crowdfunding? Well, it's a method that allows a large number of individuals to pool their resources together to invest in properties they might not be able to afford individually. Imagine a group of friends chipping in to buy a luxurious beachfront property. Now scale that up 100-fold. That, my friends, is the essence of real estate crowdfunding. It's a collective effort where each investor owns a small piece of the property and reaps a proportionate share of the returns. Platforms like Kickstarter and GoFundMe have made crowdfunding a household term. However, real estate crowdfunding is a tad different. Here, you're not donating to a cause or backing a product. Instead, you're investing your money in tangible assets, properties that have the potential to generate income or appreciate in value over time. But as with all investments, real estate crowdfunding isn't all sunshine and rainbows. It does have its risks. For instance, if the property doesn't perform as expected, your returns could be lower than anticipated. There's also the risk of platform bankruptcy, and the fact that your investment is often illiquid, meaning you can't easily sell your shares if you need cash quickly. Despite these risks, the benefits of real estate crowdfunding can be quite appealing. It provides an avenue for smaller investors to get a slice of the real estate pie without the need for substantial capital. It's also a way to diversify your investment portfolio beyond stocks and bonds. And let's not forget the potential for attractive returns. So there you have it, a glimpse into the world of real estate crowdfunding. It's a strategy that's democratizing the real estate market, making it accessible to a wider range of investors. Crowdfunding provides a way to invest in real estate with less capital, but it's not without risks. So tread carefully, do your due diligence, and may your investments be fruitful. So there you have it, 4 strategies to generate a $10,000 monthly income from real estate. We've explored the world of rental properties, where consistent rental income and property appreciation can pave the way to financial freedom. We've delved into real estate investment trusts, offering the chance to be part of large-scale real estate ventures. We've uncovered the fix and flip strategy, a hands-on approach with the potential for significant profit. We've navigated the waters of real estate crowdfunding, democratizing the real estate market for all. But remember, these are just the tip of the iceberg. The real estate realm is vast and varied. It's crucial to do your homework, research thoroughly, and exercise due diligence before diving in. Patience, perseverance, and informed decisions are your keys to unlocking the goldmine of real estate. Remember, every strategy has its pros and cons. It's all about finding the right one that suits your investment style and financial goals. Here's to your real estate success. Before we wrap up, we have a small request. If you found this video helpful and informative, we encourage you to leave a comment below. Just say subscribe and we'll know that we've made a difference in your real estate journey. We appreciate all feedback and will personally reply to your comments because we're committed to helping you succeed. Your support helps us create more content like this, tailored to your needs and interests. So don't hesitate to interact with us, share your thoughts, questions, or any topic you'd like us to cover in our future videos. Thank you for watching, and here's to your success in the exciting world of real estate.